All right. Well, first off, wow, 2 presentations. If you need to stretch, please stretch. Take a deep breath. What I do is I appreciate what I just heard. What I do is going to be really talk about lowering the gear here. I appreciate all I heard. I'm going to talk to you about something very simple. Okay. So this is the software I'm using. And when I say simple, I mean simple, okay? So just, this is automated, okay? But I'm going to talk to you about what this thing is doing and why it's doing it, because I'd really rather you learn how to do this manually on your own so you can believe in it. And then if you want to have it do it for you, well, then that's just wonderful. So let me get going with the presentation. I always have a challenge here starting these things. Okay. So we're going to talk about something you can immediately put on your chart right now. No money involved. You can start testing it, and I believe you're going to improve your trading. I'd like to thank Traders Talk Live very much. Your commitment to trader education is greatly appreciated. I'm going to talk about the next level of trading education, where the power of trend and momentum trading is placed directly on the chart. Okay, that's toward the end of the presentation. But what you're going to learn today is something you can actually take home and say, my gosh, I can start working with this now, and it won't cost me anything. So we're going to show you a specific entry, specific protective stop, trailing stop suggestion, and immediate ideas for testing. And I don't want to take away anything that was mentioned in the earlier presentations at all. Everyone has to find what speaks to them, and that's what's so important. I'm going to show you a brief overview of trend and momentum trading. I'll show you some charts. Seeing is believing. Pictures are proof, right? And then you can start on your own and see how this works for you. I will demonstrate trailing stop and what we consider a semi-automated trading environment. I say semi-automated because you are the trader in command. Now, remember, we're adults here. Trading financial instruments using contract stocks or options is extremely risky. Only trade with money you can afford to place at risk, i.e., afford to lose. Past results do not guarantee future results. Please consult a licensed professional prior to trading using any real money. Paper trade to learn any new concepts. Paper trade regardless of your level of expertise. There are no magic wands out there. The only thing you can do is create your own magic wand by working with something that speaks to you. That's my belief. Briefly, I've done this for, trading over 25 years. 10 years ago, this is my 10th year anniversary to have hit the mark trading. It's a newsletter, and I just started it because I was wanting to help people. I do a nightly video and a written summary. I do hold some total immersion boot camps, either for position trading or the most popular is day trading, just day trade. Everything I'm talking about today can be good for stocks, options, bonds, futures, forex. I've got various indicators experience, and I've spoken at different trading conferences and provided numerous webinars for traders promoting what I consider relaxed trading. Okay, so this is me. This is my trading room at the house. My internet is poor, so I had to rent an office. I have very poor internet. Okay, we're going to talk about day trading. And remember, day trading is the most demanding. So you must keep the trading simple in order for you to be able to relax, okay? Now, in everything that we do, we look at the charts with an all-encompassing point of view. Price action, trend and momentum. We're going to show you a price oscillator, and market linkages. That's important. That means what one market does might influence another. Okay. Now, before I do anything else, let me just remind you, if you would like to sign up for free 30 days, you can get my morning client email. I send this out Monday through Friday on trading days. Just either drop me a line, martin@hitthemarktrading.com, or sign up on the web page. Okay. And what this is this basically, it's nothing complex at all. I look at the news and I say every morning, and I say, well, what happened? And then I distill down what I think is important for traders with a bent toward day trading. Okay. Briefly, you would go to my website, hitthemarktrading.com, go to the contact page, and here's where you can sign up. Okay. Absolutely. So I'd love to send this to you. I mentioned the boot camp. Here's where you can learn more about the boot camp. And this day trading is called Just Day Trade. It's really total intensive immersion. It includes time in a real-time room. And you can just read more about it if you like the presentation I'm ready to start giving you now. Okay? Let's get on with our feature presentation. Now, from here on out, my intention is to provide you excellent education. Here we go. Okay, so what is momentum trading? Momentum trading is the art of spotting a market ready to move, selecting a trade, entering the trade with confidence, and utilizing predetermined exit points. Now, I always have a saying that entries are easy. Exits are the most difficult. We'll get into that a little later. Momentum trading builds off a firm understanding of support and resistance, along with known areas prices attracted toward moving. We're talking about trading directionally, up or down, riding the price wave rather than reacting to what might happen. This is usually accompanied by a price oscillator, and we can use this for intraday or short-term trading, holding over a few days or holding over a few weeks. So today is about day trading. Now, determining trend, intraday people should look at the daily chart for your big picture. Use a short-term chart for tactical entries. And as a general rule, the more volatile the market, the smaller the time frame. So I typically will use range bar charts. However, I'll also be watching in the periphery, maybe a 5-minute or 15-minute chart, only just to determine, are we moving or not? Okay. Markets are going to move in 3 directions, up, down, and sideways. If the market is sideways, we are greatly challenged unless the range is large. Therefore, it is imperative to find moving markets. This means, for example, ES futures traders must expand their horizon at times to look at other futures which are showing movement. Now, in Rooster Call this morning, I discussed how throughout most of 2017, we had some very, very, very low readings on the VIX. Now, I don't talk about the VIX a lot. We don't determine anything on the VIX as far as how we're going to trade, but it is a measure of volatility. And the readings were so low. And then you look at the chart of say, the ES in 2017 or any of the equity index futures, and you see these extremely tight range days. And I promise you, a lot of people busted out because they could not move from thinking, all I want to do is trade the ES. All I want to do is trade the YM, okay? So maybe we had a few good days, but for the vast majority in 2017, there were some extremely tight range days, okay? Now, people that are using very small profit targets, yeah, they probably survived. Otherwise, the better trades were in gold and crude. So my point is, if the markets are tight, I do not care what system you're using, it's going to be tough. So a lot of people use oscillators. Oscillators, what a name, oscillator. I wonder how they figured that. Let's call this an oscillator. Well, how do you spell that? Oscillators derive their power from price movement. So for this reason, you really need to understand how to read price action and support and resistance areas. The oscillator then provides a trigger point for entry. Now, this is what most traders look like when trying to figure out which oscillator or which system to use. So you remember the story about the 6 blind men who felt a different part of an elephant, right? And each one felt like, oh, they knew exactly what they were touching. Well, the same can be said for traders. Some people are going to say, oh, this is MACD. This is the best thing. I know this was going to be the best I can use. Another guy might say RSI. Another guy looks at the market differently. Percent R speaks to him. Or another guy looks at Bollinger Bands and says, well, you can't beat the Bollinger Bands. Or someone has an expensive proprietary system they bought, and they say, well, it's got to be good. Look at how much money I paid for it. Or whatever. Everyone has their personal favorite. And in the beginning, I used slow stochastics, MACD, Williams percent R, and RSI. And I probably threw the Bollinger Bands in there. And you can do that when you're trading off daily charts and looking at weekly. You can do that because at night after the markets close, you've got plenty of time to relax and do all the analysis you want. You don't have that luxury in day trading. Day trading is reaction and fast markets recently. So at present, I use one indicator after years of trading and my desire to simplify. And I call this the commodity, or what I use is called the Commodity Channel Index, or the CCI. Now here's an important understanding. Again, keeping along that theme that we're all adults here. In a strong momentum market, all price oscillators work, and I mean everything will work. In a tight range market, all price oscillators will lose their predictive value, and I'm telling you, all of them. So this is one more reason to monitor several markets looking for momentum. Now, the Commodity Channel Index is a price oscillator created by Donald Lambert. In a moving market, CCI is shown to lead price. Now, don't take my word for it. Check out John Murphy's take in his book, Technical Analysis of the Financial Markets. Now, here's what I love to always highlight here, okay? And by the way, in a very thick book, he only spends about half a page on this, so no reason to buy the book. Notice that the CCI turns before prices, hello, at each top and bottom, okay? So what's he talking about? Well, the CCI is starting to turn, saying momentum going down. He's telling you, I'm predicting prices are going down, and boom, price goes down. What's going on here? I'm predicting price going to go up. Boom, price goes up. What about this? I'm predicting price going to go up. Price goes up. Okay? Now, since he's momentum, and momentum is leading price, what gets you in early can also, of course, tell you to leave the party a little early. So certainly we use another filter, and we have nuances, and we have things designed to keep us in trades longer. Okay, but this is the CCI, and I'm telling you, I did a lot of work on this thing to really convince myself that yes, this is really good, and I don't need anything else. So all you need to know is that we're comparing price with a simple moving average over a selected time span. Mr. Lambert suggested 20 days. Oops, I lost my deal. Here we go. Others have modified Lambert's suggestion using 14, 6, 5. I've seen 30. A lot of times, if you want to make a name for yourself, you just pick a different number, right? I've seen 30. I've seen all kind of numbers on the CCI. You got to figure out what speaks to you. So I'm going to tell you, in my work, I've done a lot with the 14. Okay. Now, thankfully, in fact, all the software platforms have this totally automated, and they are a free oscillator on your platform. All you have to do is define the period. So here's the calculation. If I look at this too long, my eyes will glaze over. You can freeze this or Google what is CCI. I think what you should know is CCI is plotted on a histogram. I'll show you a chart on this. The 0 line represents major support and resistance. The 100 line and minus 150 represent minor support and resistance. We're going to talk specifically today about the diagonal trendline break on the CCI. It's very powerful, or auspicious, as they say in Asia. We'll start drawing this from the plus or minus 150 line. And it's a very, 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 very simple complex concept. Very simple concept. Okay, so let's just first define the CCI. Okay, bear with me now as I get my bouncing ball. So what we have is a 0 line. Now, this is major support and resistance. Here's the plus 100 in red. Here's the minus 100 in red. Here's the plus 150, minus 150. And the gold line, that just indicates 200 or minus 200. It just indicates, hey, we're in extremes. So using the CCI, we think, okay, we have an uptrend if we have at least 6 bars above the 0 line. Well, okay, we've got 6 bars above the 0 line, yep. And that gives us an uptrend. If we have at least 5 to 6 bars below the 0 line, we call it a downtrend. Okay, see, down, down, up, up. So just remember that we're dealing mainly with the 150 line, okay? And I will mention there's an exit you can take on the 100. We'll get into that. So your platform is going to have a default setting of 20. For day trading, you're going to adjust this to 14. And I don't really advise that you say, well, if 14 is good, 10's got to be better. If 10's good, you know, I'll go down to 2. You know, there is a such thing as analysis from paralysis, honestly. You get stuck in these rabbit holes and you never accomplish anything. So 14 is pretty good. In fact, the guy Wells Wilder Jr., the guy that invented RSI, he used 14 a lot in his work. So 14 seems to be something about it that just works pretty good. Smaller time frames in moving markets with a good range is what we're looking for. And I think you should trade during the rush hour instead of all day. And normally, mornings are the rush hour. And then there's a afternoon. We always have an afternoon train that we expect to arrive. We're going to talk about the diagonal trendline break on CCI. There are 4 other patterns that I use and teach, along with other robust setups, filters, and nuances. Very easy, very simple. But with 50% of the trades are probably accomplished by what I'm showing you now here. So I hopefully have got you interested to immediately start testing. Key point to remember, draw a line starting at the plus or minus 150. Better trades are in markets showing momentum. And you're going to use a 14-period CCI for intraday use below 60 minutes. And then if it's 60 or above, go to 20. Keep it simple. So the entry rules and I'll show you how to draw this. We're going to talk about a diagonal trendline break with trend. Start drawing from plus or minus 150. Use a confirmation price bar unless the trend is really super strong, okay? And for counter trend, I would only suggest this after you've mastered trend trading. So this is today's YM. The red vertical line represents 9:30 a.m. ET. It's just a personal thing for me, just me only, okay? I don't like to trade the first 15 minutes because a lot of times they're trying to figure out which way they want to take the market. Obviously, I missed this big long drop here, okay? The computer got it, it's all set up. The computer only just takes the rules and applies it. But we had a good day today. Notice that we had a trade right off the bat at 9:30, or a little after 9:30. Up we go, and then we had the sell signal. So when I talk about a diagonal trendline break, I'm looking at the CCI, and I'm just simply drawing from 150, drawing it down. I want to touch the CCI and then extend it. So what I mean by that is right here. I just want to start drawing, be able to touch and extend it down. So then if I break it, it's a long signal. And there we go. Okay. Here's a diagonal trendline break here, and here's a short signal here. Here's a diagonal trendline break here. Well, okay, so that's probably, let me see if I can do this right. Probably, I have a hard time with straight lines. Hang on. Probably somewhere around here. Well, the program did not give a signal, so there must have been some reason that she did not want to give a signal. But still, if you don't use the program, it was a nice healthy trade. Here's a diagonal trendline break I don't have marked. And there's your sell signal there. Here's diagonal trendline break here, and there's your signal there. Diagonal trendline break. She says, well, I assume you're already into the trade. That's what she's saying. These lines are just something from some trades I took today. So diagonal trendline break, all I'm doing is drawing from 150 or minus 150. I want to touch, I touched it there, extend it down, and if we hook up and break it, go long. How simple is that? Now you can immediately start testing this. And on and on and on and on and on and on it goes. One of the things I do though is if there's a range of $200 or less, I'm not interested. I'm not interested. Sometimes in the real-time room, I'll say, now, I'll take this trade, but I'll tell you right now, we've got very low probability until we break out. So I just use a no-go rule. If it's $200 or so, around 200 or so, and that's it, we're just banging back and forth, I'm not interested. Forget it. If I forget that rule, then guess what? I typically am going to take a hit. Okay. All right. So how simple is this? Too simple. That's why a lot of people won't follow it. They feel like they've got to have something more. There's just got to be something better, something give me a little bit more edge. And all we're doing is looking at this diagonal trendline break. So diagonal trendline break here, it says go short, hello. Diagonal trendline break here, it says go short, okay, hello. Here's one here, it says go long, okay, hello. Here's one here, it says go short, okay, hello. Well, that's a nice trade. Listen, it's the retail trader that mucks it all up, okay? All the big guys who control this market, all these guys are using extremely simple systems, I firmly believe. Protective stop, I'm going to show you what the best thing I've found. Intraday long, you place the bar, let's say you're going to go long. You place your stop below the trigger bar or the prior bar to the trigger. I'll show you what that means. If you're going to go short, you place the stop above, either your trigger bar or the bar in front of that, whoever's higher. Okay? Now I'm going to show you this. Here we've got, this is still today. And so let me get my drawing tool. Oh, there's a question. Oh, thank you for that, Tanya. Okay. So let me get my pen. If I have a trigger, says go, let's see right here, go long. And let's just say it's right. This one got it early. All I got to do is, who's lower, the red bar or the green bar? Put your stop there. What about over here where this computer generated signals? Who's lower? Well, over here, this guy's lower. So that's a stop. Another signal occurred. So it's like if you were thinking about the trade and now you got another reason to take the trade. You're being told, hey, hello, you should be long here. Let's look at a stop. I'm sorry, a short. Here's a short here. So where is the stop? I would put it right here. The bar prior to the trigger. Now, unfortunately, we're all in this sideways muck. So that's why I have an overriding rule, right? But still, if you didn't take the $200 rule, or when I'm not going to split hairs. If it's 210 bucks, I'm probably not going to take the trade. But anyway, if it's a tight range, you simply see that it didn't work out, and you either get yourself out early, say, well, now I see him in a sideways range, or you took a loss. That's it. End of story. Okay? Losses become your price of admission in this business. And it's all about taking a series of trades, and the secret is not winning big, but the secret is winning small and winning often. You string together a series of short duration, high probability trades. Okay, so let's just look over here. Here's one diagonal trend line break go long. Okay, so that's probably about right here. Sometimes I'll show you the live chart and I'll mark it up with a vertical. Here we got a signal. Now this is more of a market structure. This is a low and this is a high and this is a higher low. So that's why he took this signal. Now, the use of the swing theory work for initial protective stop. That can be a pretty large stop. But basically what they're saying is that price has a tendency to start moving up, pull back, and then move up. So the swing theory people would say, okay, well, here's my stop. On any long, here's my stop. And you look at this after the fact, and it's just like, wow, that's phenomenal. Well, of course, because we had a wonderful day, and you can easily see it. When you're in the heat of the battle, I prefer having something where if I get a signal, my stop is going to go, who's lower? Okay, the bar previous to the signal is lower. So that's where I'll put my stop. And up we go. Let's draw this one. Are we at minus 150? Yes. Can I come touch? Yes, right there. All right. So there's my short. I'm not good at this drawing lines business, but you get the picture. And you see that because we're using a momentum indicator, and your stop is going to be whoever's higher. So let's just say that I'm not drawing this perfectly, but we would have got in. before this guy. So any of these, if we took it here or here as our stop, it works. It's very simple. And it's something you can immediately test. I don't want you to take my word for anything. I want you to test this stuff out. Now, I do have a trailing stop method, and that's this blue line. So if anybody's going to get long, then until price closes below the blue line, they're going to be in the trade for as long as they can take it. And when we do something like this, let me see if I can show you something. When we do something like this, this is how you get the days, like today, of what is this? A run of 560 bucks. Now, all this is chop. Got caught in the chop. And I knew it. So then you work and okay, well, there's 560, there's 312, and there's 150. There's 475. Okay? This is 2 days, not 1 day. Don't think that's 1 day. It's not. That's 2 days. 2672.50. That's 2 days. It's not 1 day. Okay? Here's where yesterday, okay? Perfectly fine morning, but you know, afternoon, one more trade. What's one more trade? And so you've got to keep trading to get out of what blew up. Okay? So you had 2 losses and all these wins and come back in the afternoon because you got to have one more trade, right? Well, I should have just left it alone. 3 losses, okay, got to make it up. And then this is today. So I blame this really on me. And in the room, I said that. But that's okay, we recovered. All right, let me pull this back. Oh, where's my YM? Okay. So let's just look at these signals. I got to be conscious of my time. Let's see here. Here's probably a. Remember, I'm using different filters on this because I want this to be a little bit higher priority than just. So here's the diagonal trend line break. Minus 150, check. Touch it, check. Extend it, there's the break. Where's the protective stop? Always in the same place. Always, always, always. When you make it mechanical, you relieve yourself of having to wonder, well, what do I do now? So here's the stop. Right? I said above the entry bar. Well, that's right here. This was the one prior to it. Either the entry bar or the one prior to it. There's your stop. You were not stopped out. And this is how you catch the bigger runs. I think. I don't like to trade all day either. Yesterday was silly that I came back in the afternoon. This trading assistant simply offers up some trades and you make the decision if you want to do it or not. I don't know if you saw that. I should have left it up there. 2 contracts, and I haven't changed this, but I used to just take one off early and then let the other one run. I need to change that since the markets are opening up so much more. I generally look for 15 and 30 ticks, for example, on the NQ, 15 and 30. But with this trailing stop, I don't have to worry about when I want to take this off because it's following the market. okay? It's following the market, and that, for me, is a relief. Now, this one probably got it has to go through it. Okay, it did not go through it on bar close, so it was still in the trade. Okay, it was still in the trade. I think that the protective stop is the only way that you're going to catch the longer runs. Okay, so see this? So I need to change this, but it's saying, okay, I just want to take one off immediately and then let it run. All right, kind of a psychological deal. Bang, I put money in the bank. So different instruments, different levels. And then you say, my God, why would you risk $300 to make 40? I don't look at it that way. Okay, I'm looking at a very, very high probability system. And so, yes, there will be the occasional loss like I showed you earlier, but for all practical intents and purpose, we're going to get filled. So the second one will just run as long as the market wants it to run. Now it looks like we're sideways now. So what do? Well, I want to measure this, right? And I'll say, okay, well, where's my, how much are we talking about? Martin ruler. Well, there's $192, right? So you're not going to, by the time you get in as a day trader, I promise you, by the time you get in, they are going to absolutely kill you. Okay? So I like to mark it up, and I just want to wait. Because if they don't know what they're doing, if they don't know, they're afraid to buy, afraid to sell, by the time you get in, you're gonna get whacked. You got to wait for this to resolve itself. Okay, this is the kind of things I teach. All right, let's get back to the program. I got to wrap this up. All right, you can have profit targets where you decide the target. For example, I typically 8 ticks I'll go for gold and then a runner. One day I went 4 different trades and the runner was every single time break even, right? So I should have gone all in, all out, 8 ticks. Well, we never know, do we? If the CCI started turning at the 150 line, crossing back toward the 0 line, that's an early warning saying, hey, be careful, momentum might be leaving the party. And if you've crossed the 100 line, then you probably should get out of the trade. You can always get back in. Use a trailing stop for capturing greater gains. Now, what I've told you is robust across any time instrument, any chart time frame. If an action repeats, we can trade it. And I like activity-based rather than time charts on the day trading. I really do, right? Because you just arbitrarily look at your watch and say, okay, after 5 minutes, I'll take a long if there's a setup. It might be a huge bar. And these huge bars typically can come back and retrace a little bit, and that might knock you out. Okay, I do have no-go rules. Oh, by the way, I just remembered. On that 300, I was not risking $300 to make 40. That 300 was for 2 contracts, okay? So let's just say it was 150 for the initial 40, and I know I need to change that. I need to change the first target. I told you I'm not interested in taking a trade if the range is around $200, 250, forget it. Every single time I try it, you might as well flip a coin. Maybe it'll work, maybe it won't. You don't have any probability there. I do have filters, yes. And some of the filters will say, hey, stay away from this. An oscillator, any oscillator, is going to be chopping you up if you try to trade the small range. So let price resolve it. Remember, this is very important. You call the broker and say, listen, stop me from trading if I lose $1,500. Well, in a fast market, you might get your statement and it says you lost $1,800, and you call the broker and say, wait, I told you $1,500 only. In a fast market, they may have not been able to take you out in time, and that's just part of day trading. All the charts I created today, I use a Gina Trader. I like range bars because it's all uniform, but the methodology is good for tick charts, volume, Renko, time, anything. All we ask is for a trading range. Now, we buy into the idea of financial freedom through day trading, and the reality is this is a very tough business. Chance favors the prepared mind, so control your mind, be prepared, or stop immediately. Now, what if you had a trading assistant? So your assistant monitors the market and calls out trade setups. What if all you had to do was scan the suggested setup and either agree or disagree? Would your trading be more relaxed? And could you let the market come to you? So that's what this Rhymes range bar package is all about. Oh, I'll get 2 minutes to go. So you can monitor multiple markets. I've got 16 criteria that are checked before a signal's given out. You load the entry exit, the trailing stop, it's all done for you. You're the trader in command, okay? So if you're interested in more about this, it's really impressive. Check out Hit the Mark Trading. Go to my clients and resources page, and you can click on a Gina Trader. Now, I don't know that I have any time for questions. I'll certainly take, I'll let you write me if you have any questions. Looks like we're trying to break out here. One of the things I want to show you, and then I'll let you go, is I'll put this in the text. I'll send this to everybody. And here's how you can find more about what is this? I wanted to put this in the chat box for you. But you can go to the website. Everything I talked about is a Just Day Trade course. You can go to Clients and Resources, hit a Gina Trader, and here is where you'll find out about the package and the software. And really, that's all I have for you. If you'd like to reach me, Martin@hitthemarktrading.com. And beyond that, I will let you go. And thank you for your time today. I hope to have given you something free you can immediately test that will start helping your trading. Bye-bye now.